All right, what's going on, guys? My name's Calvin. Today I'm going to go over with you how to fill out a Form W-4. Um, Form W-4 is an employee's withholding certificate. This is a form that's issued by the IRS on an annual basis, and basically it's something that your employer uses to figure out how much taxes to withhold from your paycheck. Um, it's pretty important that you know how to fill it out. It's a way to make sure that you don't owe taxes at the end of the year when you go to file your tax return. We're going to get started. At the first step, pretty self-explanatory. You're just going to fill out your personal information. So it's just first name, middle initial, last name, social security number, and your address. Um, the one part of this step that can be a little tricky at times is figuring out your filing status. So it's important to select the right filing status because this has a huge bearing on determining how much taxes are withheld from your paycheck. The filing status dictates what's known as the standard deduction. So a standard deduction is basically an amount that the IRS reduces your income by to arrive at your taxable income. So if you pick single, your standard deduction is much smaller than married filing jointly. And then also if you pick head of household is in between single and married filing jointly. Now, each filing status has certain criteria that you would have to meet on whether you would fall in that bucket or not. Um, Determining your filing status is kind of beyond the scope of this video. But if you have any questions about it, my contact information is at the end of this video. Please reach out with any questions if you need any help figuring out your filing status. Um, so once you have step one filled out, you're going to move on to step two. Um, this step can be a little tricky. So this step is basically you have to report if you have multiple jobs. Most of the mistakes that are made at this step is those who are married filing jointly with their spouse fail to take into account the job of their spouse. So when you're married filing jointly and you file a tax return, the IRS looks at you and your spouse as like one person. Like your taxable income is one. So like both of your incomes are added together and then they use that to arrive at the total taxable income between the both of you. The reason why this is important is because the US employs what's called a progressive tax system. So, a progressive tax system basically means that the tax rate you pay rises as your income increases. So, the more money you make, the more you have to pay. So, that means that if you fail to take into consideration the income from your spouse's job, and you only calculate your withholdings based off of your income, it's very likely that your withholdings are going to be calculated assuming that you're going to be in a lower tax bracket than you actually are, meaning your withholdings are going to be based on a lower rate than what you're actually going to owe. It's really important to make sure that if you do have a spouse that also has income, or if you yourself has a second job, make sure you fill this part out correctly. Um, Again, this is something that is beyond the scope of this video as far as determining the additional withholdings that might be required for a second job. Um, so if you need assistance with that, again, my contact information is at the end of this video and feel free to reach out. Um, but one thing I will say here is that the IRS does provide a pretty good estimator that's pretty accurate. That's kind of like a self-help thing. So you could always try to kind of explore that avenue on your own, and figure out how much your extra withholdings would need to be. Um, but again, it's kind of beyond the scope of this video, so I don't want to spend too much time on it. But this step, super important. If you have a spouse that works a job, make sure you take that into account, figure out where your additional withholdings would be, and then that would be entered below on line 4C, and we'll get there in a moment. But again, most common mistake at this step is forgetting to add the job for your spouse. So if you're married filing jointly, make sure that you take that into account and your withholdings are adjusted accordingly. All right, moving on to step 3. So step 3, this is another step that sometimes is glossed over. Um, I think the most common thing you hear from people is just pick single and no dependents, and then you'll be good. You won't owe any taxes. That's not always the case. Sometimes it is, sometimes it isn't. But one other thing to consider is if you do have multiple dependents or even one dependent, um, it could behoove you to claim them on your W-4, because essentially what that does is it'll increase your paycheck. So, if you have 2 or 3 kids or 4 kids or however many, your grocery bills are going to be high, your monthly expenses, your living expenses are going to be high. You might need that extra money in each paycheck to take care of your kids, take care of your dependents and your loved ones. So, um, it's a personal judgment call, obviously, but um, the one thing that I'll say is, if you're having trouble making ends meet, this is a way to kind of ease that burden. You don't have to you won't get a huge tax refund at the end of the year, but you might live a little more comfortably throughout the rest of the year. So, again, that's something that you might have to think about on your own. Um, the other thing I'll say about this step is, um, if you're gonna claim dependents or qualifying children or qualifying relatives at this step, make sure that they're actually eligible to be claimed on your tax return. um, that's something that again is beyond the scope of what we're going over in this video. Um, but if you need assistance with figuring that out, again, my contact information is at the end of this video. But more than likely, most times people who are claiming dependents, if they're your children and they live with you, and if you don't have any type of special marital, divorce agreement in place, it's pretty easy to figure out how many dependents you have. Where it gets a little tricky is when you have a qualifying relative and there's whether or not they lived with you, there's income limitations and other things like that. So it's a little bit easier with the kids, not so easy with the relatives. So again, that's a kind of a longer discussion to go over. So beyond the scope of this video, but if you have any questions, feel free to reach out. Um, all right, now down at the bottom, step 4. So at this step, this is where you're going to claim kind of like everything else that wasn't caught up at the top from the 1 or 2 jobs that you had to take into account. So the other income for, step 4A, what they're referring to here is, it could be interest, dividends, retirement income, it could be rental income, it could be capital gains, anything like that that's not from the actual job that you're working at right now. You would add this income in there, and then your employer would then take that into consideration when they figure out your final taxes to withhold. So 4B, the deductions that they're referring to here are any deductions that would be in excess of your standard deduction. So once they redid the tax code when Trump was in office the first time, they increased the standard deductions by so much that it's almost commonplace for most people to use the standard deduction just because they're so high now. Unless you have really high property taxes, or if you have a really high mortgage and you pay a ton of interest, or if you have a ton of contributions like charitable contributions and things like that, it's unlikely that you're gonna itemize. If you're just an everyday person with normal income. So, Most times you're going to probably be able to ignore this line, except if you have some other deductions that you might be able to take. Now, the most common deductions that you would take would be student loan interest, IRA deductions. Um, there could be some others that you might want to take into account, but again, um, probably going to ignore this line for the most part if you don't have student loan interest or any IRA deductions that you're going to take. Um, Line 4C. So this line is what you would use to enter the additional withholding required from any extra jobs that you identified up top in step two. But you can also just arbitrarily enter any amount that you want here if you just want to increase your withholdings throughout the year. Um, some people do it just as like, oh, like what if I have extra income that I didn't anticipate having? This is kind of like a safety net. Or some people just do it so they can claim a refund at the end of the year, and then it's kind of like a little bonus for them. So, it's up to you. It's not anything you have to use, but it's there if you need it. Um, all right, and then that's pretty much it. Step five, you just sign off, you date it, and then you give it to your employer. And then from there, basically what your employer does is they'll take all this information. There's a calculation that's done, and then they'll figure out what your withholdings are. Now, the last thing I'll say before we end this video is you should probably review your W-4 annually to see if it should be updated for any status changes at all. Whether you have new children, as your children age out, they'll no longer be a dependent. Um, if your one of your parents come to live with you and you have a qualifying relative, if you get married, if you get divorced, all types of life changes that could happen that would cause this to need to be adjusted. It's important that you do that so that you can make sure that you don't owe taxes at the end of the year, or so that you make sure that you're not over withholding too much and putting yourself in a financial burden. So um, that's it. If you guys have any questions, or if you need me to give you any more information on it, please feel free to reach out. As I said, my contact information is at the end of this video. Thanks, guys.